Before you panic about the reports that income tax department can now scan your social media, watch this video. The reality about India's new tax laws is drastically different from what the headlines suggest. And you need to know the truth here.
Starting April 1st, 2026, India's income tax authorities can access a person's social media accounts like WhatsApp, Telegram, and email.
The headlines are certainly attention grabbing, but as with most of the financial and tax matters, the reality is more nuanced than what we need to be reading online. Today, I am going to break down exactly what the proposed income tax bill of 2025 actually says about what powers the IT department really has and what does it mean for you as an NRI. First, let's understand what's actually changing here. The upcoming income tax bill of 2025 is set to replace our decades-old Income Tax Act of 1961. One particular section that's creating a buzz is the Section 247, which discusses the department's authority to access digital records during an investigation. The section mentions that authorized officers can gain access by overriding the access code of computer systems or virtual digital spaces. Now, this sounds alarming at the first glance, and many media outlets have portrayed this as tax department getting new powers to freely snoop through everyone's social media account. But when we look at the details and speak with the officials, a different picture emerges altogether. According to tax officials, these powers aren't actually something new. They have existed under Section 132 of the current Income Tax Act of 1961, which enables authorized officers to inspect electronic records during search operations. What the new bill does is simply clarify and codify these existing powers of the digital age, making explicit which was previously implied only. Now here's the crucial point that many reports are missing. These powers apply only during active search of survey operations where tax evasion is suspected. The tax department isn't going to be randomly browsing through your Instagram and Facebook accounts looking for signs of undisclosed income. These measures come into play only when you are already under an investigation, and even then, only if you refuse to provide access to digital records that are relevant for the investigation. To put this in perspective, India has approximately 8.79 crores of annual tax filers, but only a fraction ever face search or survey operations. For vast majority of honest taxpayers, these provisions will never affect you. I think it's also important to understand why these clarifications are necessary in today's digital world. Back when the original tax laws were written, most of the assets and financial records were physical, like your cash, gold, paper documents in the filing cabinets. But today, so much of the financial life exists in digital spaces. People may have cryptocurrency holdings, online investment accounts, or digital payment records that are relevant to determining their true income. Without the ability to access these digital spaces during investigation, tax authorities would be significantly hampered in their ability to deduct sophisticated forms of tax evasion. The new provisions are simply bringing tax enforcement capabilities in line with how people actually manage their finances in 2025. Now let's talk about specifically what this means for NRIs. If you are maintaining proper tax compliance both in your country of residence and any Indian sources, you have absolutely nothing to worry about. These provisions won't affect your day-to-day life in any way. However, there are some practical takeaways that are worth considering. First is to maintain consistency between your lifestyle and declared income. If you are posting about luxury purchases or expensive vacations on social media while declaring minimum or zero income, this discrepancy could potentially raise flags for you. This isn't about tax department scrolling through your feed. It's about obvious inconsistencies that might emerge during an investigation or a scrutiny. Second is to keep detailed records of all your financial transactions, especially if you are transferring large sums between countries. Having clear documentation of the source of funds and ensuring proper reporting will protect you from unnecessary scrutiny. Third, if you have significant assets or income in India, consider consulting a tax professional who specializes in NRI taxation and NRI cross-border compliances. The tax landscape is continuously evolving, and staying compliant requires expert guidance. And remember that as an NRI, you still have legal rights to the privacy. The tax department can only access your digital records during a formal scrutiny or investigation on any of your income tax notice, and they must follow proper procedures. If you ever feel your rights are being violated, you can seek legal recourse also. So I want to address a common misconception that I'm seeing among some NRIs. The fact that income tax department can potentially access digital records during an investigation doesn't mean that they are conducting mass surveillance or that your personal communications are being monitored. The scope is limited to financial information relevant to determining your tax liability. Now I understand that any expansion of government powers can seem concerning, especially when it comes to our digital lives. But it's also important to view these changes in context. Every country has tax authorities who are updating their methods to address the realities of increasingly digital financial world. This isn't just unique to India, and it doesn't signal some drastic new levels of intrusions. What we are seeing here is simply the nature of evolution of tax enforcement to match how people actually conduct their financial lives in 2025. 20 years ago, tax investigators might have looked through physical bank statements and receipts during any tax scrutiny. Today, they might need to look at your digital bank statements or cryptocurrency exchange records. The principle is same. Even if the medium has changed, the underlying approach and the mindset remains the same. In conclusion, with the headlines about social media accounts getting scanned might sound alarming, but the reality is much less dramatic. For those taxpayers in India and NRIs, make sure that proper compliances are in place. They apply only during investigations and not general surveillance power, and they are simply updating the existing tax authority powers in the digital age. So my viewers, there's no need to delete your social media account and worry that the tax department is monitoring your vacation photos. Stay informed, maintain proper compliance, and keep detailed records of all your financial advice and matters. If you found this video helpful, please hit that subscribe button and join my exclusive NRI only WhatsApp community where I keep on posting such more updates, and I also tell you about when I am releasing my next videos. And if you have any questions, feel free to drop them in the comment below, as I take 3 good questions and answer them every week in my series called 3 Question Thursdays. I'll see you in the next video. Thank you.